Bitcoin just crashed to $73,000, and now everybody is asking the same question. Are we finally confirmed to be in a bear market? We see a 40% haircut in the price of the asset, and we see 4 straight blood red monthly candles. That is the longest losing streak that we have seen since the 2018-2019 crypto winter. Let us now examine whether this is merely turbulence or the start of a very cold season for Bitcoin. We saw the October high of 126K per coin, and now we are trading near the $73,000, $75,000 range, depending on when you look at the chart. We have seen a drawdown that has wiped out every single breakout since the ETFs launched, almost at least. Certainly since the election, that's for sure. The red candle streak is clocking in at the 4 consecutive months in Bitcoin history. Strings this long have only appeared inside of full-blown bear cycles. But to be more sure, we will test 5 structural indicators that separate a correction from a longer downtrend. Number 1, we're going to look at the price structure, the lower highs and the lower lows on the weekly chart, plus weekly closes under the 200-week average. We're going to look at momentum deterioration, the daily RSI deep in the 20s while the 12-month oscillator is slipping into the mid-40s, a zone that is previously aligned with mid-cycle bear phases, some derivatives capitulation, on-chain profit squeeze, and hostile macro conditions. They are all adding up for what I believe to be a Bitcoin bear market. So when price, momentum, leverage getting wiped out, the on-chain profitability, and this insanely chaotic macro backdrop all aligning to the downside, the weight of evidence really, in my humble opinion, is shifting from healthy correction to a cyclical bear market. The burden of proof now lies with the bulls to reclaim the trend lines and restore positive funding. Now, to be clear, I am always a permanent Bitcoin bull. I'm just saying we need to look at some indicators and how they align with historical price action. So first, if we're going to interrogate the market skeleton, that's the price structure itself. We're just beginning with the weekly chart here. We are printing a very clear procession of lower highs at 126K, 106K, 92K, and most recently 75, and we even touched 73 there for a little bit, and each failed rebound has reinforced seller control of the market. If you look at the weekly closes, they are now sitting 12% beneath the 200-week moving average. Now, historically, that is the market's bull-bear demarcation line. Sustained trading below that curve has only happened during full bear cycles in 2014 to 15, 18 to 19, and the crypto winter of 2022. And volume actually confirms the break as well, because distribution weeks are carrying 25 to 30% more volume than accumulation weeks, which is a very classic sign of transfer from weak hands to the strong hands. This structure is really mirroring the stage 4 markdown blueprint described by Wyckoff. The supply is overwhelming the demand, the rallies are shortening, and each bounce tops out beneath the prior one. Now, price alone never seals the verdict, yet when the skeleton is bent this way downward, we must assume gravity until a higher high invalidates the pattern that we have seen. So now we need to look into momentum on top of the structure to see whether internal energy agrees with what the chart is shouting here. Price is the surface, but momentum really is the engine. Right now, every single RPM gauge on that engine is stalling out. So some key observations here: when we look at the daily RSI, it is between a 22 to 24, which is a textbook capitulation reading. In past cycles, this showed up late in bear legs, which is interesting, so relief rallies can fade quickly. When you look at the weekly RSI, that is at a 32, the same zone as the June 2022 macro low and the May 2021 mini bear market. And both of those required months of sideways chop before any durable upside appeared. I'm not saying that that's going to be the same time as this bear market here, but really when you are looking at the RSI here, we are signaling a bottom because it has not been this low since the depths of the crypto winter. That is the 12-month RSI reading at about a 44. The bulls kept this metric above 55 through every single uptrend in Bitcoin since the year 2016, and dips into the 40s match the deep bears of 2014 to 15 and 2018 and 2019 right here as well. So we see the short-term panic layered on a mid-term downtrend. This is the signature of a sustained bear market, not some garden variety correction. We know that a lot of people have been saying that we've been in a bear market for a long time, especially when you price Bitcoin in gold or silver instead of dollars. But today's price action really here is really starting to show that we may be nearing a bottom when you look at Bitcoin's relative strength index. So when we talk about daily, weekly, or monthly, we're looking and seeing that momentum really has rolled over on every single time frame that you could potentially care about, which is telling us that the engine is sputtering, and without a spark above 50 on a weekly RSI, the bulls are driving uphill in neutral. Momentum tells us the speed of the decline. Let's look at the fuel supply next. So are the traders still pressing their bets, or have they already bailed? Price is gravity, but leverage is rocket fuel. When the rocket fuel tank empties this fast, that means the trend just keeps falling. Let's look at some key numbers here. The 7-day funding rate averages minus 0.01%, which means that the shorts are paying the longs, the first negative print of this cycle. Traders are hedging aggressively right now, signaling a wholesale drift to defensive positioning. The open interest right now, $27.6 billion, down 14% week over week. We have seen leverage collapsing over and over again. How many times have you seen the sentence levered longs liquidated? And right now we are just beginning to see some risk aversion, thank heavens. And such rapid drainings of leverage historically land in the middle innings of a bear phase, not at the first pitch of a bear phase. So we're seeing negative funding, we're seeing the shrinking open interest, and a flat basis. It's all painting a single picture here. There is sideline leverage that we are now beginning to see, and scarce liquidity as well. The derivatives are shouting that the unwind still is yet unfinished, but it seems as though that people are beginning to learn their lesson a little bit. The big narrative is that the OGs have been selling because Bitcoin has had tremendous liquidity ever since the ETFs came to market, and the on-chain data shows the profit squeeze. Trace the coins, you feel the pain. The ledger never lies about who is underwater. You can look on-chain and there are profitability metrics that reveal very deteriorating holder economics. The adjusted spent output profit ratio, ASOPR, has dropped to 0.94, which indicates that coins are changing hands at a 6% average loss. A sustained sub 1.0 reading that maps to capitulation periods in 2014, 2018, and mid-22, and we are here yet again. The MVRV ratio is sitting at a 1.5, which is half of the level near the 2025 peak, and firmly within the 1.0 to 1.6 range that is historically associated with Bitcoin bear markets. The compression in this metric here really just tracks the unrealized losses building across the entire holder base of Bitcoin. And then when you are looking at the net exchange inflows, they are looking at plus 4,000 Bitcoin per day, which is suggesting that fear-driven selling is happening right now. We're seeing rising liveliness in those old dormant wallets. They are reactivating to liquidate. So we have profitability. It's bleeding right now. The long-term coins are waking up and exchanges are absorbing the flow. That cocktail only shows up in the meat of bear markets, never at their start. So we've diagnosed a lot of internal stress. So now let's zoom out to the external climate. I'm talking liquidity. I'm talking rates, policy. Maybe these things will tell us whether relief is on the horizon or if this squeeze is getting tighter. We've seen the Warsh nomination announcement for the new Fed chair, but there is a lot of skepticism about whether he's going to be dovish or hawkish. We know what Trump wants in terms of interest rates getting cut, but we have seen some renewed skepticism about what Warsh is actually going to be doing. There's lots of market uncertainty around this AI boom, whether it's a bubble, and because Bitcoin trades like an amplified high beta tech stock, it is treated like it is a risk-on asset, and we are still in a risk-off environment. The January spot ETF inflows totally flatlined, so we're seeing that institutional sponge for Bitcoin kind of going pause right now. On top of that, the corporate whales like strategy, they are buying less Bitcoin. The buy that they announced on Monday was their smallest one in a while, and I really think that this regulatory overhang that we're seeing, there is this renewed debate on the Digital Asset Market Clarity Act. It's really pushing a lot of the large institutional capital regulators to the sidelines until the rules are final. We've checked every structural box that defines a bear environment. So the final slide here is going to map the tactical playbook for surviving the squeeze and front-running the eventual turn. Diagnosis complete. We looked at 5 key diagnostics, 5 red lights, bear conditions, kinda confirmed. Price weakness, we've seen a huge drawdown. We've seen momentum loss, the derivatives deleverage, the on-chain squeezed, and liquidity has been tightening. QE might be coming, but the fear and greed index is parked in extreme fear. The searches for Bitcoin bull run on Google are down 70% since November, and 25% of institutional respondents are now labeling conditions a bear market, the highest share since 2022. Now, history shows that the process to flip all 5 of these boxes take between 6 to 9 months. So position sizing and patience are the edge for survival, and if you want to be positioned before the change occurs, Swan Private is for you. Swan Private helps high net worth families, family offices, and all individuals be positioned before the change happens. They will work with you every single step of the way to build a generational Bitcoin position safely, securely, and strategically. Visit swan.com/no-second-best to learn more. My name is Adam Livingston. I am the Bitcoin Wizard. Please like this video and subscribe to Swan and leave a comment whether or not you're still bullish on Bitcoin. Have a terrific day. Do not party too hard. Class dismissed.